Have you ever gotten a random letter or phone call from someone wanting to buy your house? Well, if you did, you have firsthand experience with investors buying up properties to turn them into rentals at a rate that's making it really hard for people to own their own home. Well, hello, this is Wendy Pennell, and investors are in the business of scooping up homes and turning them into rentals. They're doing more than that though, okay? They're also building entire neighborhoods of build-to-rent homes. I mean, some say that it's a good thing since it gives people the chance to experience what it's like to be in a home without having to deal with all the headaches that go along with it. Others say it's pricing individual buyers out of the market and crushing the American dream of owning your own home. Okay, so what's the current situation? Well, in 2021, investors bought a whopping 24% of all single-family homes. Now, up until then, they've been buying around like 15 to 16% each year, going all the way back to 2012. In many cases, investors offered way over the asking price and they would pay in cash. And that made it really difficult for a lot of prospective buyers to find something they can afford. And many of them have put off buying a home hoping prices will come down. So we have all of these people that are being forced to rent. Now, there are a few different ways we're seeing this transition to having so many rentals. Many of the new homes being constructed aren't being purchased by individual homeowners. Instead, they're part of build-to-rent communities, which basically are entire neighborhoods of homes only available for rent, not for purchase. Some people call these just, horizontal apartments. And these communities have been popping up everywhere, okay? Especially in California and southern states, like Texas. The average rent for one of these homes is $2,039 a month. Brad Hunter with Hunter Housing Economics estimates that build-to-rent homes make up about 10% of new home construction. And he says that trend is simply a response to the dynamics of the current market. And what he means by that is people who would otherwise be buying a home but can't afford it. He describes how millennials are getting dogs, right? They're having children, they're working from home, and they're saying, I need to move out of my downtown apartment and into a single family home because I want a yard and parks nearby. Now, according to some estimates, the demand for single family homes in the US is around 5 million more than the current supply. And Hunter says that builders like Toll Brothers, D.R. Horton, and Lennar Homes have invested billions of dollars on build-to-rent homes in an effort to close that gap. David Howard, CEO of the National Rental Home Council, says the affordability problem is driving the growth of build-to-rent homes. He comments that with interest rates at levels we haven't seen in years, housing affordability continues to be a challenge for many families. People are waiting for interest rates to come down. Okay, he continues, there is an appeal and broad-based demand to live in a single-family home, even as a renter. Howard explains that a lot of folks are looking at newly built single-family rental homes in the same way as the starter home market. He continues saying, Build for Rent is providing an on-ramp to home ownership. They'll stay there for 2 or 3 years and then purchase a home. According to the Urban Institute, builders constructed about 131,000 build-to-rent homes over the last 3 years. So obviously this trend has really picked up steam in recent years, but it's actually a continuation of what happened during the years following the 2008 financial crisis. Right? Developers realized then that building communities of rental homes was like way more efficient and lucrative than buying them up one by one. And then the pandemic, accelerated this trend as more people could work from home and they wanted to get out of the city and find a place with more room. James Gaines comments on how cheap financing allowed investors with deep pockets to capitalize on this opportunity. He describes how all of a sudden, every time you see a few hundred acres down the road, instead of being available for people to buy, that land is being turned into houses for rent. This trend is really affecting the Dallas market too, okay, which is actually top in the nation for build-to-rent neighborhoods and apartment construction. Last year, according to Rent Cafe, nearly 2,800 build-to-rent homes were constructed in Dallas, which was about 19% of all build-to-rent homes completed in the entire United States. And that's up from like only 500 completed in Dallas in 2021, and at that time it ranked third in the United States. In an article by Fort Worth Report, Ted Wilson reports that rising interest rates and the overheated housing price increases of the past few years are two primary reasons build-to-rent homes are making an impact in hot markets such as Fort Worth. He describes driving factors for the build-to-rent market as locations with desirable schools or access to transportation, larger living spaces, and the ability to have a yard to accommodate pets. And of course, the amenities are a big draw too. Brandon Lombardi says his company is changing the negative perception a lot of people have about renting by delivering unique neighborhoods in great communities, resort-style amenities, superior locations, and a focus on the resident experience. That lines up with the trend of building larger homes observed by Ben Miller, the CEO of Fundrise. He says, "We thought people would want smaller homes." But he continues, "They want the bigger home. They don't want the starter home." Zach Thompson with History Maker Homes says build-to-rent homes cater to people in the missing middle of the housing market who can't afford some of the higher priced homes in the area, and yet they don't want to settle for something less. Ultimately, the growth of these build-to-rent homes is part of a larger trend of big investors buying up single-family homes and turning them into rentals that goes back to the Great Recession beginning in 2008. During that time, as we all know, home values plummeted. Lots of people found themselves unable to pay their mortgages, right? Big Wall Street firms and private equity funds scooped up all these homes and saw just huge profit margins. And speaking of single family homes, there's that whole other side to rentals, right? We have our build to rent neighborhoods, right? But we also have your traditional neighborhoods built to be owned by individuals, and they're just being taken over by these large company investors. Like if you've gotten one of those unsolicited calls from someone you've never heard of offering to buy your house, you know exactly what I'm talking about. Now, this is a different ballgame, right? Because you have a community that is built for homeowners where ownership is by individuals. In the past few years, across America and definitely in Dallas, we saw investors just scooping up properties left and right. These were the cash investors who would offer above the list price with all cash and a quick close. So here you have these individuals trying so hard to get into home ownership, and then they're just bid out time and time again by investors who could close fast with all cash. Essentially what you have is the build to rent scenario attacks home ownership at like a societal, big picture level, whereas in the owner occupied neighborhoods, it's more localized, right? It's more invasive. You could say it's even more insidious because it's like happening right next door. Okay, so knowing this is happening, that raises the question of who is the culprit here, right? And who's the enemy? Who are the buyers behind all these build-to-rent communities, and who in the heck is gobbling up the homes in regular neighborhoods? Well, you essentially have two different parties in play here. First off, you have your institutional investor. According to Investopedia, an institutional investor is a company or organization that invests money on behalf of other people. Examples include mutual funds, pensions, and insurance companies. Upon a time when you saved for retirement, through like your 401k or your IRA, you invested in the traditional stocks or bonds or mutual funds, right? And your mindset would be along the lines of, these are companies, or these are government bonds. You also had the option of investing in mortgage-backed securities. And basically, those are like a bundle of home loans that behave kind of similar to a bond. If you've ever gotten a letter saying your mortgage is being sold to another company, there's a good chance that it's being bundled with a bunch of other mortgages to be divvied up into shares of a mortgage-backed security. Nowadays, though, you have yet another option. You can buy into an investment structure that has bought thousands of rentals. In some ways, it's a parallel to a mortgage-backed security. You might be surprised thinking, you would never buy that. But basically, it's the mutual fund that's investing in the rentals, and then you're investing in the mutual fund. So essentially, yes, you heard me right. If you have a pension or a 401k or an IRA, you may very well be investing into the mutual fund that is preventing you from owning a home. Some of the ways this can be set up is through real estate investment trusts. Okay, now these trusts they're also called REITs. They're companies that invest in real estate and are traded in the stock market. So that's another way that it happens. According to industry advocacy group NAREIT, U.S. REITs own $4.5 trillion in real estate, and the total value of their shares tops $1.3 trillion. It describes how an estimated 150 million Americans, 45% of the country's population, live in households with REIT investments. Right now, institutional investors own around 5% of the 14 million single-family rental homes in the United States. But get this, okay? Analysts at MetLife Investment Management predict that number could rise to 40% by 2030. You've probably heard of some of these investors, okay? They include companies like CrowdStreet, Realty Mogul, and Fundrise. And these companies have engaged in big marketing campaigns, and they provide opportunities for people to buy shares in rental and vacation homes. According to the Washington Post, Fundrise owns and operates 50 build-to-rent communities with 5,000 units and is in the process of building 6,000 more. So that's one of the reasons we're seeing a rise in so many rentals and rent-to-own communities. It's basically being packaged up and sold as an investment. Another way is simply big companies investing into rentals for long-term profit. Okay, so in other words, if you were, to distinguish between the two, sometimes these packaged rentals are sold like securities, okay, to people like you and I who are saving for retirement, and others are held by private companies or private REITs looking to profit. Home Partners of America, Invitation Homes, Tricon Residential, Progress Residential, and American Homes for Rent are some of the big players investing in rental homes across the country. Several of these companies have financial backing from private equity firms like BlackRock and Pretium Partners. Last year, a California private equity firm bought all 113 lots in the new Oaks on Chisholm Trail community in Round Rock near Austin. Borozewski, a leasing consultant for the community, comments on how we still get people coming in every week asking if they're for sale, and we have to say no, sorry, just for rent. He continues, it's a rental generation now. Which brings us back to build-to-rent homes and traditional single-family rentals. Are they a good thing? Are they a bad thing? I mean, do we really want to be in a rental generation? Well, it depends on who you ask. All right, those who support build-to-rent homes say if you want to live in a single-family home in a nice suburban neighborhood, but you don't want to be bothered with yard work or home repairs, they're a great option. Abba Badarai from the Washington Post describes the story of a 48-year-old renter named Tim Van Zyl who gladly pays $2,600 a month for his 4-bedroom rental. Van Zyl describes how he likes having a detached home without having to deal with the hassles of home ownership, such as mowing the lawn or changing air filters. He goes so far as to say, when a light bulb goes out, I don't have to replace it. You'll also hear that build-to-rent homes are a good solution for people who want all the amenities of an upper-end neighborhood, but they don't want to be tied down to a certain location. Van Zyl sums it up by saying, if I have to wait 5 years, or realistically 7 years, to put aside enough for a down payment, at least we can live comfortably in a place that looks like Pleasantville. Similar to Van Zyl, for others, build-to-rent homes are simply the best short-term solution until they save up more to buy. Another renter interviewed by the Washington Post said, we looked into buying a few times and just couldn't swallow it. Adam is 34 and the owner of a dog walking and dog grooming business. He said, we fit the demographic of people who 5 years ago would have bought a huge house in the suburbs, but now prices are crazy and we're making different decisions. Another renter, 37-year-old Justin, said, buying a house is the next step, and this is holding us over until we get there. Although his rent has gone up 20% since he moved in at the beginning of the pandemic, he said he hopes to stay there until he saves up enough to buy a house. He explained, it's got the home set up without the hassle of a long-term commitment. Needless to say, it's great for builders and the companies that own the homes, right? Builders don't have to negotiate sales with hundreds of different buyers, and they often make more profit by selling entire communities of homes to investors. And the companies that buy them can charge a lot for rent while the homes appreciate in value. In 2021, Fox Business reported how homebuilder D.R. Horton sold an entire development of 124 homes in a Houston suburb for $32 million to Fundrise, representing a profit of 50%, about twice the margin they typically see when selling to individual buyers. Now, on the other hand, if you ask housing economists, they'll tell you single-family rentals and build-to-rent communities are an undeniable threat to the dream of home ownership, which for generations of Americans has been a primary vehicle for building wealth. Texas A&M economist James Gaines said, "We are replacing the supply of available starter homes with even more rental housing." He comments that it's shifting the economic dynamics for entry-level home buying and has a real impact on what kind of houses people can get and how much they can get for them. Batterai with the Washington Post describes how housing economists say this shift toward rentals puts would-be home buyers at a disadvantage. She continues, "Housing policy and poverty experts have long considered home ownership a one-way ticket to the middle class. And that's particularly true at a time of soaring housing prices." She explains both rents and home prices have risen precipitously during the pandemic. But while homeowners have benefited from low interest rates and appreciating home values, renters have seen no such gains. Daniel Pang with the Urban Institute said rental payments don't go into building equity, which is a significant portion of most Americans' household wealth. Home ownership is a vehicle, a pathway through which a bunch of privileges can be delivered. It always has been. The growing demand for rental properties really reflects the widening wealth gap between you got your lower income Americans and then those at the very top. According to Forbes, the bottom 20% of Americans in terms of assets saw their wealth increase 10.4% between December of 2019 to September of 2021. But the top 20% saw their wealth increase 18.2%. Now, if you were to ask builders, they say they're simply responding to market demand. Jacques Petroulikas with Next Metro Communities said, "Build to rent is not replacing home ownership. It's another leasing option that provides people a more appealing option in the interim before they buy a home." Here's the thing though, unlike fixed rate mortgages, rental payments almost always go up every year, making it harder for renters to save for a down payment and leaving many feeling trapped. The problem becomes even worse when a few big corporations control a large portion of the rental market. When there's less competition, landlords have more control over the price of rent. And when it comes to things like home repairs, or losing a job, dealing with a large impersonal corporation is a heck of a lot different than calling up your mom and pop landlord who probably only has like one or two rental properties and is probably going to be more understanding about the situation. And on top of all of that, most people would prefer to just live in neighborhoods where people own their homes. Now, why is that? Well, with a rental, you have a couple of problems. The first one is our big corporate owner obviously isn't there, so they don't know if the outside of the home needs paint or if the fence is in bad shape. And then you have the renter who can see everything but isn't allowed to fix anything. A tenant isn't allowed to go in and replace the fence or paint the outside of the house. So it's a problem of one person not seeing it and the person who is seeing it not being allowed to do anything about it. So kind of just based on that situation, you can tend to have a home that isn't as well maintained. Another thing is, the nature of renting is that it tends to be more transitory. For example, you're moving to Dallas, right? You want to get to know it for a year before deciding where to buy. That's a really common thing to do. But for the homeowners in that neighborhood, that means constant turnover, okay? You just get to know your neighbor and then they move. So naturally, a person who has bought their own home wants to put down deep roots, and it would be nice if their neighbors did too. So the question becomes, what can you do about this trend? Well, if you're invested in mutual funds, Find out if they include companies that own and operate build-to-rent communities, right? Take a second look at what you're investing in. And if you're trying to buy a home, build up your savings by living below your means. And by all means, look into government assistance programs. They can help make home buying way more affordable. There are loan programs out there where you can literally buy a home with no down payment and very little out of pocket. Finally, if you're in a neighborhood with a homeowners association, you can try to pass rules to limit the number of rental properties and set an amount of time after purchase before renting is allowed. That's what a neighborhood in Charlotte, North Carolina did back in 2019. Peter Wariski with the Washington Post describes how Valerie Hamilton, the former president of the Potters Glen Homeowners Association, recounted how residents pushed back against rising crime and poorly maintained properties associated with a growing number of rental properties in their neighborhood. She said, "We didn't want to become a renter's paradise. We want people who are going to plant flowers and trees because it's their home." She remarked how she was bothered by the lawn equipment left in the front yard of a tenant-occupied home, and how she wrote a letter to the corporate owner of another complaining about how the police had been called to the property multiple times in response to domestic disturbances. There were also complaints of drugs and gunfire at a home owned by the $24 billion real estate investment company called Invitation Homes. But the community banded together. After making changes to their HOA, residents in the neighborhood saw the number of investor purchases drop by more than 50%. Of course, the rental companies, they didn't like it. Right? They're claiming the new rules made rental housing less accessible and that they were prejudicial, discriminatory, uninformed, and misaligned with the concept of fair housing. But Hamilton rejects that argument. Okay, she goes, "Don't get me wrong, there's some very good renters in this neighborhood." She said, "But people who own their homes usually take more pride in their property, and we wanted to make sure we keep a place for them." The article also mentioned some other tactics homeowners associations can use to stop homes from being bought up by rental companies, including a requirement for the HOA board to approve lease applications. It can be hard to change the rules because they have to be voted on by all the residents, but persistence pays off. You know, this is a situation where an HOA is being used in a good way, and I love seeing that. So many times there's just an abuse of power and fraud and just ridiculously excessive fees. In fact, I did a whole video about HOAs that you might want to watch right here. In the meantime, Wendy out.